All right. Well, Amazon is down 14.2% after hours. And this is actually an improvement. Amazon dropped right away after the earnings report by 20%. It's since gained back 7% in just the past couple of minutes. But here we are down 14%. We are going to jump into it in this video. We're going to go through the earnings report, and we're also going to go through what my predictions were going into this report. So this will be a fun one. I'll try to break through the noise, break through what's actually going on, and see why investors are so upset about this earnings report. Now, first, I did make a prediction on these earnings reports Monday. So I predicted what was going to happen, and I first want to take a look at that prediction. Here's the relevant portion to Amazon. I think in my prediction, and again, I own a lot of the stock. I'm bullish on the company long-term. I'm not going to trade out of it depending on this earnings report unless something really went catastrophically wrong with the fundamentals. But if it comes in a little bit under, it doesn't change my long-term investing thesis. If it comes in a little bit over, it also doesn't change it. But my prediction is that Amazon will come in above expectations. Overall, I think all of the actual fundamentals, the core businesses of Amazon, are doing exceptionally well. I think the ads business is growing. I think it's more insulated than Google's, Meta's, or Snapchat's. So I like the ad business even more than Google's. I think the Prime subscription is growing in membership. I think that members are very happy with the value proposition of it. Consumers are happy. I think AWS is likely growing. It might decelerate a little bit, but I think it's still growing to a huge extent. And I think that the retail business is actually doing quite well. I think they probably made good sales and are going to project a good upcoming quarter. So I got this one wrong. I'm sorry to disappoint. Now, let's go ahead and look at what investors are actually seeing here. When a stock trades down, it's now down 13.5%. So it's leveling out a little bit. We're seeing a bit of a recovery here. It was first down 20%. It's up about 7.5% now from the lows, it's down a ton. It's down 13.9%. Anytime I look at a stock that's fallen 10% plus after earnings, there is some red flags there. There's something that investors are seeing that they do not like. And I want to get to the bottom of it. Now, we have this data here that shows us a synopsis of what Qualtrim believes is the problem. Qualtrim says Amazon shares are trading lower after the company reported worse than expected Q3 sales results and issued guidance for next quarter below analyst estimates. So both a weak quarter last quarter and they're issuing guidance next quarter that's also not great. Let's go ahead and look at the top, the main headline numbers here. The earnings per share were 28 cents. That's a little bit above the analyst estimates, but it's not a big deal. They don't really pay too much attention to the EPS. The revenue was below estimates, 127.1 billion versus 127.4. So they missed their revenue by 300 million, which is less than 0.5%, but still meaningful. Amazon's missing their revenue now. Amazon Web Services was also a miss. 20.5 billion versus 21.1 billion expected. And then advertising was a strong point. 9.55 billion versus 9.48 billion. I think that Amazon has a unique stance with their advertising. They're not as affected by iOS because everything they're doing is inside of their own app. Now, let's go ahead and look at some of the numbers here. I'll break down what I think is the good and bad. And even though I own this stock, I want to do it as objectively as possible. Now, it says that net sales increased by 15% to 127. I think this is pretty good growth, 15%. If we bring this up on Qualtrim, this is what it looks like. Here's the revenue growth chart, and we have the last quarter here. You can see the 15% growth here, 127.1 billion. That is 14.7 year over year. I think that's pretty decent growth, especially for a company of Amazon's size. So I don't think the overall top line growth, in my opinion, that wasn't a disappointment. I'm not concerned when I see 15% growth, but we get into some parts that are a bit more concerning. The North American segment, sales increased 20% year over year. That's pretty good. For the US, Amazon is still taking market share, growing sales. International is where they're struggling. International segment sales decreased, a decrease of 5% year over year to 27.7 billion. But again, I've been stressing this point a million times, and I hope I gave you all advance notice. The foreign exchange is going to be the big thing with big tech. Unlike a lot of companies, they do business outside of the US to a huge extent. When I'm investing in Texas Roadhouse, I don't have to worry about foreign exchange. They have a couple restaurants outside of the US. They have 800 in the US. When I'm investing in Amazon, Microsoft, Apple, Google, Meta, Whatever company it is, if it's big and it does business outside of the US, you're going to keep seeing this foreign exchange issue. International sales went down 5% outside of the US, but if you adjust for currency exchange rates, they actually increased 12%. That is how big of a swing it is. The FX headwind is crushing big tech. It crushed Google. Now it's crushing Amazon. The AWS segment sales increased 27% year over year to $20.5 billion. This is a slightly more deceleration than expected, but it's by like half a percentage point. I don't think this was bad. I think the AWS segment held up pretty well, 27%. People will say, oh, it's not growing as fast as Google. Okay, Google is a fraction of the size of AWS. AWS is massive, Google's tiny. So it's expected that Google will grow faster than AWS. Now, Microsoft, on the other hand, is just crushing it with Azure, which I'm not too concerned about. If Microsoft steals from Amazon, I'm heavily invested in Microsoft as well. So I own both of these companies. I basically own all the big cloud leaders, which none of them right now are doing fantastic. But back to Amazon, they say it increased 28% excluding changes in foreign exchange, so slightly faster. Operating income decreased $2.5 billion in the third quarter compared with $4.9 in the third quarter of 2021. North American segment operating loss was $0.4 billion. International was $2.5. They're losing a fortune in international. This is part of the strategy of Amazon. If you're not aware, what they'll do is use any profitable part of their company and they will push and push into different growing segments of the business. In this case, international. They will keep aggressively trying to make market share, and over time, way down the road, they hope to increase margins. So right now, they're in growth mode. They're in trying to capture market share internationally. They're doing that at a loss. They're doing it internationally. They're doing it in India. They're doing it all over the world. And in the US, that's kind of where they fund it from. AWS segment operating income was $5.4 billion compared with operating income of $4.9 billion in the third quarter. So there we have some main highlights of the company. It seems like a normal Amazon report so far, but again, I think the big thing that really is causing the stock to sell off, my opinion so far, it is the weak guidance. We have a paragraph right here from CNBC where they mention Amazon's guidance, and I really think this is the killer. In fact, it's this one right here. Amazon said it expects to post fourth quarter revenue between $140 billion and $148 billion. So they're expecting next quarter 140 to 148. That represents a year-over-year growth of 2 to 8%. That's pretty slow. Analysts were expecting sales to come in at 155. So analysts were saying, hey, we're expecting around 155 in sales growth. And then Amazon says, well, hold up. We're going to be growing 140 to 148. Even on the high end, we're not going to be meeting your expectation of 155. Now, having said that, there's one thing I want to mention with this range, 140 to 148. There is someone that has been tracking the guidance that Amazon has given since 2000, the range, and that's in gray here. The gray lines are the low end of the range and the high end of the range of the guidance of revenue growth. In the red is what actually happened. 94% of the time, Amazon comes in at the high end of the range. So between this range here, statistically and historically, Amazon has a 94% chance to come in closer to the high end than the low end. So I think it's unlikely, historically speaking, statistically speaking, that Amazon comes in at the 140. I think they're giving themselves some leeway there. Most likely they're projecting around 148, which it's still a ways, 148 to 155. Still not great, but I don't think that's too bad. If they come in with 8 or 9% revenue growth, I don't think that's too bad. Now, I will go over another thing that I think is problematic. We look at the revenue growth, and again, I don't think this is too bad. Even with the lower guidance specifically on revenue, I think that Amazon will hit that higher end of their guidance. I think the revenue growth will continue. The thing that I'm most concerned about is this trend right here. I look at this chart, and this is concerning. It's one thing for Amazon to have a dip for a quarter or two in their EBITDA, but they've dipped for 3 quarters now, and it's continually going down. Their big investment cycle that they've done is taking a lot longer to unwind. Now, I think that the returns they'll get on this investment cycle are good in the long run, but right now it just does not look good. We have a decline over a 2-year basis, compounded of 49% in EBITDA. And this is really the way that you would try to value Amazon on an enterprise value to EBITDA. The net income was $2.8 billion. just not great. It's still not up there with the 2020 levels, the 2019 levels. The net income's up a little bit, but still not amazing. The earnings per share, look at this chart. We know that Amazon, and you can exclude this one right here. This is with the Rivian stake. But before that, even before Rivian was part of the calculus here, we know that Amazon can earn 70, 80 cents per share. It's trending back upwards a little bit, but again, this is taking longer than expected. The shares outstanding are still trending upwards, so they're not doing enough in terms of buybacks to offset the dilution. The shares outstanding are up 0.5% year over year, so an increase in share dilutes the shareholder. So overall, this quarter to me looks like the past couple of quarters. They still haven't gained meaningful net income, EBITDA, or earnings per share, or cash flows. All of their cash flows are going out to investments. They're not earning huge profits right now. Now, when we look at this on a breakdown of different business segments, you can see what's going on here. They break it down, excluding foreign exchange, so you get a constant currency basis. The company grew its online sales by 13%, physical stores by 10%, good growth in both of those, third-party services by 23%. So their third-party sellers are growing pretty fast, 23%. And for the people saying that Amazon likes crushing third-party sellers and competing with them, they're growing third-party sales much faster, double the speed on their platform than they are first-party. So Amazon does have lots of other sellers growing their sales. The subscription services grew 14%, advertising grew 30%, AWS grew 28%, other, I don't know what this is, a small portion of the company grew 168. But overall, I look at these numbers, all of them above 10% growth rates. That doesn't look terrible in terms of total growth. The big thing here is profitability. When you look at these numbers and quarter after quarter, you see EBITDA going down. It's the same thing that you see with a lot of other companies right now. Investors are becoming impatient with any company right now that's not showing profits. They're looking for highly profitable companies that will perform this quarter. Companies like Apple. Apple's doing good because they make profits every single quarter. But Amazon, this company is under fire right now. It's under a lot of pressure. I think management are going to take this very serious. The market's sending a clear message. Now, it is recovering a little bit. It's up to minus 12.6%. So it's gaining back a little bit. We're back about halfway now, but we'll see how this goes. So like I said in my prediction video, this one is a tough one to predict. I can't get a handle on Amazon. I can't guess what direction this one's going to trade. I go into every earnings knowing it could go down 20% or bump up 15%. I never know what direction. But when I look at the long term and the core businesses, I'm following the advertising business. The advertising business beat expectations. I'm following the Amazon Prime membership and third-party sales. That also beat expectations. Then I'm following the AWS and cloud business. That came in at 28% growth. It was slightly under expectations, but still pretty good. So far, the core businesses and the reason that I'm invested in the company are still growing. They're still on track. And in the meantime, over the next year, as those core businesses grow, I do think that Amazon can lower their expenses. They can improve their cost structure. They can do things to increase the profitability of the company. So I'll be looking at that over the next year. I again think this next quarter is going to be rocky for Amazon. It's very unpredictable in my opinion, but there we are. Tough quarter for a lot of companies. And on a side note, good job to Texas Roadhouse and Apple. I'll have more on those companies in their earnings report in a video on my other channel tomorrow.